credit card debt, your student loans, your car loan, your home loan. When should you pay those things off? I think the math is actually pretty simple. People make it out to be more complex than it really needs to be. If you have, we'll give you an example. If you have a credit card with $10,000 on it and your interest rate is 18%, and you have, let's call it $20,000 in a checking account that is earning you 1%, I think that is the cleanest example of a time when, again, there are some assumptions in here. I would pay off my credit card. I would take the 10 grand that I had in savings and pay off the credit card and save myself that 18% that I'm losing on an annual basis. The only time that I wouldn't is if that $20,000 is going to be used maybe to purchase a home, or you feel like you really need that $20,000 as liquid assets because you're running into some troubled times or whatever it may be. You see something coming in your future where you really need that type of capital liquid and available to yourself. But other than that, if you have one interest rate that far exceeds another, that needs to be paid off. So I'll give you another example. Your student loans are, let's call it $15,000 or $20,000, and they are at 7%. You feel like you can produce 10% or 12% in the market in terms of an investment. I can get 15 or 12 or whatever it may be in the market. Some people say, well, I should pay off my student loans first. Not necessarily. Maybe you should invest that money. If you can get a higher return on your money than your student loans and you're paying an interest on your student loans. I kept my student loans for years because I knew that I can take the capital that I had and invest it and get a better return than I was losing on my student loans, if that makes sense for you, right? If I'm earning 12% in the market, then why would I take $50,000 or $20,000, whatever my student loans are, and pay off debt that that's only being charged to me at 6%? So there are times when you may not want to pay it off. I never subscribed to the Dave Ramsey thing. He's wildly successful and has a huge following. I never really understood paying off my mortgage. It's probably something I will never do. If my mortgage rate is stretched out over 30 years at 5%, 4%, 3%, depending on when you took on your mortgage, why would you pay that off? Why would you take extra money and go 1950 style and pay that down? That same 4% that your mortgage company is charging you, I feel like you could take that extra capital and go get you 7, 8, 9%, 10% in the market and be better off financially with a mortgage. Debt isn't always bad. Bad debt is bad. If you have credit card debt at $50,000 at 18%, that's a bad situation to be in. Keeping and maintaining your mortgage at 4 or 5% while you're taking your extra capital and investing into the market at 10 is not necessarily a bad situation. So when should you pay off your debt? It all depends on the situation you're in. You have to look at the interest rates. What are you losing versus what could you be gaining, and make that decision for yourself.